All right, all right. Good morning, traders. A beautiful Sunday morning here in Utah. Sunny, 24 degrees, but it's sunny. Hello, Leonard. Love your enthusiasm every time. Good morning, Michael. Good to see you, sir. Good morning, Sandy. Good morning to you, Perry. Love it. We got a great crew. Is anybody waiting in the waiting room? Let's make sure everybody's here. Everybody's audio is turned on. Let's dive in. Okay, I think we're good. Let's jump into it. Welcome to the Market Watch Group. Weekly market prep, my most favorite day. What could I rather have than coffee with fellow traders as we sit back, markets closed, we have an ease on our stress burden on a Sunday. We can be as objective as possible as we consider the market. Good morning, Bob. Good to see you. My most favorite day. My name is Scott. I'll be your host. Here are the disclaimers. As always, remember, educational, illustrative purposes only. We are not advisors. We are not brokers. We are, I believe it's going to be so there was one last component. I was ready to go with the alerts via Discord. I'm going to send another Discord out today. If you're not on it, get on it. But we're also going to send alerts out via SMS, via text. And so I'm going to check through and just kind of look to make sure that we have everybody's appropriate number. But we do want to make sure these are coming. So initially it may be email, text, and Discord, but eventually it's probably just going to be text and Discord. Leonard says he needs that link. I will absolutely send that out. It'll be a separate, just so that you see it. So there will be 2 emails from me today. There will be an email for our typical recap, right? With for those, if you ever aren't in attendance. And then I will send a separate email that is specifically directed to Discord. It will have a link. It'll have instructions on how to establish that. If you don't know how, I'll tell you this. I didn't write the instructions. My college-aged son, who is an expert on that platform, they use it for gaming, Discord. The gamers, like the Xbox and whatnot. So he helped me figure it all out. Brought in a resident expert. All right, let's get into it. Oh, you too. All right. Love it, Leonard. Love it. Market posture. That's today. What's our posture? What does it tell us? What is the market telling us? What's the story here? So that we don't find ourselves hesitating when we hear something on the news or read something somewhere and we're like, oh, what? Let's be confident in the way that we see the market. We'll look at the economic calendar, make sure we understand what's coming this week, what possibly will motivate or disrupt the market in its movement. We will go through. I'm going to pick something. I feel like sometimes here's in retrospect a weakness that I have found in myself. That is if I get a strong watch list, I get a little complacent sometimes with it. And I've noticed that recently where I'm like, oh, you know what? Sometimes I'm like, oh, look how good my watch list is. Aren't I great? When I should be thinking, you know what? There could be something out there that with this much time and strength in a certain group moved into favor. Like all of a sudden just moved into favor. And it's like, whoa, I want to trade that. But if I just keep watching the same things over and over, it's not dynamic enough. So what I'm doing, and this is what I mean when I say constant. I constantly, what can I do better? What can I do better? So be water, my friend, Bob says. We will maintain the watch list. We haven't had to get rid of much, but there's a few things here or there that just sort of die on the vine, and we're like, it's, we're watching it. Would I trade it though? That's always the question. Would I trade this? If it gave a signal, there are times where I start to realize I don't think there would be a signal that I would trade. Great, get rid of it. Stop watching it. It's irrelevant to you at this point. Watch list maintenance is one of the primary weaknesses that a vast majority of traders have. They build, all of a sudden they have like 12 different watch lists. None of them are maintained. And it's just like, what are you doing here? Let's be much more specific and how we manage our watch lists. We will go through and build our early week shopping list, and we have it's big on JP Morgan is strong. We've had it on our list, and it did all of a sudden accelerate for sure. Sandy says, is it a good strategy to keep the big guys on the list to gauge possible direction? 100%. I always watch. There are some that are staples, right? There are anchors to the watch list that are always there, that I'll always watch no matter what. Like I'm never going to not watch Apple or Microsoft, right? Absolutely. The FANGs, the bellwethers. Yes. 100%. 100%. Trading plan section of the week is section 1. We're done. First pass. Okay. I'm not going to have you answer or raise hands. Did you give me, this is just for you to reflect. Did you give me an hour a week? All 8 weeks that we've had this year, did you get a nice full new iteration on your trading plan? If yes, in your mind, if yes, I'm giving you a big hug, a big hug. So proud of you. If no, I'm patting you on the back and I'm saying, come on, give me that hour a week. Your trading plan will thank you for it. All right. All right. Let's get into it. Straight to the posture. My prediction, I believe I settled on a 6.75. I think we're going to go up a little bit today. I think we're going to go up. Okay, so now here's another question. Are you conducting your analysis before you come? And I think a good number of you are, because as we're going through this, you'll be like, oh, I'm a this, I'm a that. Anyways, make the more you're doing that, the better. As we're doing this today, let me know if you're in agreement. Let me know if you see it differently, if you think I'm a little slow, a little fast, etc. Long-term trend. So this is one that I think is interesting. Got it. Bob says he likes the discussion. That makes sense. Okay. So what I've done here with the long term, you can see these black lines here. That was the old trend line. We hit it, we came down, we got a little through it, but we came back down and got a little through it. But for the most part, these lines held and we got up to it and then we busted it. And when we busted it, I said, well, what if I were to redraw my lines? And that's the red lines. Yeah. If we broke out, so when it broke out, we scored it stronger. And when it broke out, I thought, well, what if I now connect this with this and it's up into this area here? And you can see it was a pretty good line. This one was connected, but instead of cutting this off on these 2 days, I cut off these 3 days. It's not much difference, right? Like if you notice that here for the black line, I just had to, this is cut off, but it basically held in that zone. But if I do it here, 1, 2 down, 1 right back up, and it was right back on that. So I thought, yeah, that's pretty reasonable. So those red lines you can see are a higher angle of trajectory. That's what scored us a little higher. And now you'll notice, even with those red lines, I seem to be breaking out even again, right? I'm breaking out even again. So we were a 1.25. We've been a 1.25. Total score for long term is a 2. That's as good as it could ever possibly get. So I'm always going to be careful about scoring something at the highest point because that's it. If you scored it at its highest score and then it got stronger, you wouldn't have an ability to reflect that because you've already capped it out. So that's where in running this process for years, I've just sort of realized different things, and that's one of them is what do you do? Because I've had times where I scored it, I'm like, oh, that's so great, I'm going to put it here. You'll notice how reluctant I was to go to a 1. I feel comfortable with it. Why? Because I did it on sector rotation, and because it's 5 and now 6 growth. I mean, 6 sectors. That's broad. That's as good as it gets for sectors, right? I mean, everything is strong in the growth areas. So I'm considering a 1 point or an adjustment to think maybe this thing. Now you can see back here, if you look back here in 2021, that was a pretty strong trend, and that's steeper. Even it's steeper even than the red lines. That was about a 1.5. I believe I was a 1.5 back here. It might have gotten to 175. That's about as good as it gets, but I never go to a 2. So yeah, we're right on there. I mean, if this thing breaks and gets a little higher, it could definitely kick us into that type of an angle. That's one of them that I was considering to go to a 1.5 because I had these lines and I'm breaking out of it. Bob says 1.25. Sandy says she's already at a 1.5. Okay, good, good. Yeah, I'm going for it. I'm gonna put it up there. I'm gonna give it that. So let's Michael says he's at a 1.5 as well. Insert copied cells. Let's take this to a 2.25. I'm doing it. Nope, not 1.52. Although to be fair, it's your analysis. If you wanted to go to another digit, you certainly could. You're like, I'm a 1.436. That's how I feel today. Agree. All right. Good consensus, good alignment. That remember, at the end of the day, we should be asking ourselves a question as we look at this as being representative of institutional traders and strength. What do we think? Yeah, we think it's strong, getting stronger. Absolutely, right? I'm comfortable with that. 1.5. Okay. Short-term score. Nothing. Nothing. Now, why nothing? You might be thinking, Scott, it's a higher high. But remember that right now, what we've done, so there are times where there's not an established trend that you can really just like draw your trend lines and be like, there it is. I score that a 1.25. There are times where it's like trying to recover. And as it tries to recover, you're just saying like, hey, if it breaks out, I'll give it some points. If it gets a higher high, if it gets a higher low, as it tries to work its way into a trend. That is what happened through a lot of this back here, right? If you remember, we're like, look, look at it now. Can you draw a comfortable set of trend lines in there? I think you're really forcing it if you do. And so there are times on my short-term score where I'm just sort of like giving buyers and sellers credit for what they do. But once it moves into a trend, which we have now, right? These are pretty good lines, I feel like. They're representative of this all the way back here from the start of the year till now. That's our trend. So that trend we have scored right now as a 2 out of 3. That's pretty strong. Could it get stronger? Yes, we could see it steeper than that. Absolutely, we could, right? But that's pretty strong. So the fact that it's making a higher high right now is not something I'm going to score. I've already scored that. It's already baked into this trend score that I think it could get all the way up here to the top of this trend line. And when it does and pulls back, it's going to stay at the bottom of this trend. So if you were thinking, hey, higher high, we're going to give it a quarter of a point, that's why I'm not. Because right now, these set of trend lines here and here, nope, here, those two, those are the ones that are representative of what this is doing right now. Let me know if that makes sense. Let me know if you agree, if you disagree, if you're close. I'm going to leave it as a 2. That's the score. That's the trend. Sandy's yes. Bob is a yes. Love it. Volume. Okay, so we gained a quarter of a point on long-term trend, and I think we're going to lose that quarter of a point on volume. And that's, remember, I've said that many, many times, that as the trend just sort of like, as we move into a established trend, we don't need volume. We don't need buyers to be like, oh, we're smashing they already have control. We just need to make sure that the sellers aren't trying to gain control. So let's move this down to a 1-month daily chart. Let me move this to the other side. Okay, now what's happened? We actually saw this in a similar way when we were recovering, where we had a negative volume score and it organically dropped simply because the negative days were dropping off. We're actually seeing that same thing happen, but on the other side, we had a 0.75, and now all of a sudden it's dropping because those buying days have now dropped off, and this is all I'm left with here. So you might ask, and we were looking at it, we were like, if we get an above average volume day, sorry, you know what? That last line is a little, it makes it feel like there's 2. It's just this one day. Is this above average? The threshold is 5%. So average volume on that day was 74,300. So that's about, we need about 3.6 million more than that, which would put us at about 78. We would need 78 million for that to be considered a 5% above average. It's a pretty easy barrier, to be perfectly honest. Some people look for 150% volume, and I'm like, that's just nonsense. You're rarely going to get 150% on the SPY. You could go to 120, but I feel like, this was a significant day right here. And you can see that we had an average of 78. We got 91. That's 13 million. That's about 15% better. So for me, as long as it's 5%, there you go. Okay. So nothing, that's a nothing candle. We had no new above average candles. So what we have is what you see there, which now we have a buying day here and a buying day here, which were significant because they were able to overcome this selling day. But we have this selling day here. Now, we've actually since moved past this. We've actually moved higher. This held, even though we had this above average volume day. But at the end of the day here, what do I have? I have 2 and 2. Tie goes to the buyer, quarter of a point. If that's all I saw, if you put this in front of me, I'd be like, yeah, that's a quarter of a point. Now, I would also think, you know what, I'm okay with it only being a quarter of a point because clearly it's in an uptrend, right? And so, but that is a decrease. Whoops. That is a decrease from last week. Last week, we were still, why do I keep marking instead of, there we go, going back to my spreadsheet. So that's going to drop. So you can see we've dropped from a 0.75 to a 0.5 to a 0.25 simply because the above average volume we had that kicked that momentum into gear is now older than 30 days, right? It's too far. It's too far to the left. 3 to the left, Michael said. That's right. Exactly. It's no longer considered relevant in our perspective as short-term traders. So it's still positive. It's good enough. I'll tell you that there's a chance this does drop to 0, where we just don't have any above average volume on either side. And we'd say it's neither confirming nor denying anything, which means what we have in place is what we would expect to continue. What we have in place is a nice, strong 3.5 trend score. Very strong score right there. Okay, so that's halfway through. Halfway through, we're actually shifted but unchanged, right? We're shifted but unchanged. 7-6, not 6-1. Let me go see what you mean here. Yeah, 6-1 is the very last one. This one is 7-6 right here. I agree, 7-6, but it's 7-6 on 7-4. So it's just not quite enough. Nah, it needed to be 7-8 to get that 5% threshold, and it didn't happen. Okay, I'm going to kick this back out. 6 months, always worth verifying. Let's go to the major market. Let me see. 3 bars to the left. Sorry, what are you calling out, Michael? What did I miss that you said? 1, 2, like this one here? 3 bars to the left of what? Tell me if I missed something. Otherwise, I'm just going to move on. I think we're in a good place with our volume score. 6 months. Major market. No, where are you? Where are you, major market? Major market. 3 to the left of the last one in question. Let me see if what this one for above average. I think that's it, right? I mean, this one is close. This one here, 7. Yeah, this is 7-4. I see what you're saying. 7-4 versus 7-5. I mean, they're basically average. Average. None of those got to that 5% above average mark. If they did, I would have left my score at 0.5. I would have had 3 above average. And here's the deal. This is what's interesting. Okay. Next week, this we'll see how we end up going with this. Next week, these 5 days are going to drop. Right? Interestingly. So these 5 will drop, which eliminates that one. So that leaves us with 2 here and 1 here, 2 to 1. However, those 2 are really getting stale. They're at the very edge of the chart. And they're going to, right? So I don't know. It'll be interesting to see. At that point, if it doesn't last long, then we'll drop to a 0, and then we'll see what happens. If we get any new volume next week, it'll shift the score. That's what I would say. Volume. I feel like that's one that took a little more time, but a lot of people feel way more comfortable about. Let me know if I'm right about that, scoring that. Okay, let's look at our major market. Major market. So the big question mark has always been small caps, right? Remember that right now the core mechanisms that are occurring within the market are adjusting to the Fed's current posture. Is the Fed, not he, I say he, are they as a quorum going to move into a more dovish perspective, or are they going to wait? And a lot of what we've been seeing is pushing more towards wait. So the market's adjusting. How does the market normally adjust to news that's not as good as it would like? It drops, but we haven't seen that. To me, that's actually part of That's not something that we score and put a number value to, but that to me is a quality of this market that's important to recognize. There's a pervasive bullishness, a resilience to it. It's important to note and pay attention to, in my opinion. This takes us back to May at the beginning now, 9 months. NASDAQ clearly leading. We love the NASDAQ. We love technology. S&P in the middle. And you can see here, it's much choppier, but actually the small caps and the blue chips, the Russell and the Dow, are very similar in the way that they've moved, where they started, got higher here, got lower here, got basically in the same here. So interesting, and they're both kind of in that lagging position. This is definitely bullish from the beginning. As we shift, this is where we saw the small caps dipped the hardest by double. I mean, these things were down about 7-8%. This was down 14-15%. And then it recovered all the way back, not just recovered, but got into that slight leadership. So this was very strong, but that's when the market got a little overexcited in its expectations for interest rates getting cut and started to adapt. And when it adapted, you can see these things went sideways and the Russell dropped. Okay, fair enough. Whoops. Oh, well, that's fun. What is this? This is the all-time. Look at those small caps, how strong they are. I've never done that before. I've never seen all-time. That's very exciting, though. How long does this go back to? 2000. All right. I might have to play with that someday. 66 days. Now, for the last 66 days, so basically the last 3 months, we still see where the small caps really got ahead of itself. And then it pulled back, but you'll notice it pulled back in line with the market and is actually now moved back into a slightly leadership position. So at 133, it was a bit iffy, but at 66, it really jumped into a strong position. What does that mean? It means we have technology and small caps leading. I mean, it's a little iffy because everything's pretty much in the same place. It's not like the Dow is settled underneath this. People are pretty excited about the Dow. I mean, if you look, everything, the Dow is up the least at 11.8%, and the NASDAQ and the Russell are about 13.66 and 13.8 respectively. So there's very, very close, but Russell is in a leading position. So here's the question that we find ourselves facing. Does major market move to a 1, indicative of the NASDAQ and the Russell in leading positions, which equates to a higher appetite for risk? A higher appetite for risk. Do we look at the way that investors are moving into technology and small caps as being indicative of the highest level of appetite for risk? Sandy says yes. Not surprised. I said she would have lobbied for it last week. Speaking of, do you have your doctor's note for missing last week? Because no, I'm just kidding. Was it last week even? I might be making that up in my head. My memory is not trustworthy enough for something like that. Okay. Okay. So Michael says, if you're uncertain, look at the 22 days. That's where we go for the tiebreaker. Well done, Michael. Great advice. To the 22-day chart, Batman. Let's go. So before we go, let's talk about what would. If we see a surge on the Russell, that's what would kick us into saying yes. If we see the Russell a little bit lackluster or the Dow moving, we might say, you know what? Let's give it another week. Okay, so now that we've defined what we expect to see, we go pop at, okay. So what does this do? I'm gonna have to apologize to Sandy. She said, "Oh no, oh no." Um, I don't think it's. I mean, here's the deal. I don't think if you went to a one, it's like, what have I done? Maybe you would look at this and say, I'm going to reevaluate it. I honestly still think. I mean, it's below everything else, but it's all still pretty lockstep and it's holding up. I actually think you could support that as a higher score. But for now, I'm actually going to leave mine alone and see one more week. I want to know what everybody else is doing. Sandy said one. Again, these are such granular details that the fact that we're even here means we're in a good spot. Bob said he's going to stick around. Okay. Okay. If we do turn it to one next week, I'm going to say Sandy got there first. So sectors. Oh, the sectors have been glorious, though. And again, Sandy was the first one to push the sector to a one. She was the perfect score pioneer. All right, let's go. What do we see on this? We have technology communication services at the top. We've loved them. We continue to love them. I love trading them. All staying at 0.75 as well. Love it. Financials. Strong. Discretionary. Strong. Industrials. Those are our big five. All still where they should be. And even here you see our sixth just pushing up like, come on, I'm coming up. Healthcare moving into position. We also have seen a little bit of a push in materials, and we don't love that. And we've seen a little bit of a push in energy, and we don't love that. We have broad, bullish growth, but what we don't love is the longer term impact of what basic materials and energy rising might mean. And that might be increased inflationary pressures. If things cost more to build and ship and whatever else, that could continue to slow already slowed inflationary decline, which is what the Fed is looking for to kick interest rates. So yeah, there's really not much. Gas prices going up a little bit, right? So yeah, we don't love that. We don't love to have that inflationary pressure, but we'll see. Staples, however, still just sort of down. They're steady. That's how I've been describing them. They're steady. They're done all right. Utilities, there's absolutely no indication whatsoever of defensiveness moving into this market. If people start to get nervous, if investors start to get nervous, we'll see it. We haven't seen it here. We have seen it on the VIX. So it's not like we're like, oh, this market's perfect. The VIX has had weird issues, weird concerns that we've been addressing, right? So yeah, here though, nothing. Let's go in. 133 looks great. Technology, communication services, financials all look amazing. Then we have industrials look great. There's healthcare. There's discretionary. All our favorites at the top. There's materials. We don't love you pushing up, but okay. There's our defensives. Energy. It's down here for now, but we know as we change perspectives, things can move around on us. Again, healthcare moved right. Look at that. Healthcare moving into front position. Financials, strong. Com services, strong. Industrial, strong. In fact, you can see technology is still strong, but has dipped a little. A lot of our trades have been industrials and financials recently. I just haven't. I find that I've struggled with healthcare. I did actually trade XLV, which was okay. I don't feel like I picked good candidates out of the healthcare sector. I've never done great with healthcare. Discretionary, but you can see it's a little bit mired with these here. So we like that discretionary has reemerged, but we also see materials having shot up a little bit. And there's the steadiness of staples keeping it in the running. I do love seeing energy down here, and I love seeing utilities down here, right? That's if energy can stay low, even if materials are a little higher, energy low is more important than materials low. I'll tell you that right now. Let's drop down to 22. We don't see anything shifting here. It is interesting that technology is the lowest on the 22 days. It's just more volatile, right? Like, it's actually just kind of sideways while everything else has moved up, but it got moved around by various earnings reports. I'm still okay with that. At the end of the day, this looks very strong. Same 5 and 6 sectors that are showing strength. I'm keeping mine at a 1. Let me know if you have something differently. Let's finish this up with the VIX. And I felt like I was on a good pace, and then all of a sudden I slowed down. I don't know. Okay, VIX. What did the VIX do? Oh, the VIX has been a bit choppy. So we had this back here that had us concerned, this escalation. Never got above 15 though. And then it de-escalated a little bit, gave us a lower high. And that lower high gave a good bullish trade window, right? That was a good bullish trade window. But then all of a sudden the higher low came. I hedged, took some, but kept more. And then it came down and gave us another higher low. And it's like, what the hell's going on here? And then it went up and then reversed. And just like that, lower high. Lower high right there. That gets me one of my quarter points back. And lower low. We took out the low. We broke that. So I would say it's at least a quarter of a point. It may even get, and you can see, you might be like, Scott, you dropped a half, added a half. Yes. And I know that that's something I don't love doing, but when you look at this VIX picture, it's a bit of a little choppy mess there, right? That's a bit of a choppy mess right there. Went for a 1. Sandy raised hers only a quarter of a point. Okay. And I'm looking to raise mine the full half of a point back. Look, I mean, it's chopping around in there. And you might think, well, Scott, it's chopping around in here too. I mean, it was a little, but it was actually all chopping in a upward direction. Even still, you can see that was still in an upward direction. And now it's starting to come back down. Whereas this one was like down, up, down, up. I don't know. I'm going to the 125. I'm giving it the quarter of a point for this one, quarter. And I am going to give this one here as well, quarter point. It also, there's no hedge setups going on. We would love to see if this continues a couple of days going into next week, right? We would love to see that. What's interesting is Thursday's VIX was like, gosh, it seems to be holding on even though the market's looking strong. And then Friday, the market kind of pauses and the VIX drops. So yeah, all right, we'll see. That's where I am. So where do I think you could be on your market posture? I would say I'm going here. I'm back. Okay, so whoops. 1.25. I am back in this area. I'm a 6.75. I would say conservatively, somebody could be as low as a 5.5 for, still bullish, still quite bullish. I mean, now all of a sudden that we see all of this for a long time, remember 5 was no, we had 6s back there as well in December. But back in the summer, we only had 5s, right? And the summer was pretty bullish. We still only had 5s. So for me, this is looking stronger still. So I'm a 6.75. Could you be a 1 or a 7? I'd say you could be a 7. You could be a 7. It would be hard to be higher than a 7. Is anyone higher than a 7? Out of curiosity? Is anyone lower than a 5.5? I gotta feel like if you're doing this process with the thought process, with the scoring and analytical mechanisms that we are with the objectives of the questions that we're answering, right? We're answering specific questions. It's got to be in that area. 675. 7.5. Oh, Sandy. My goodness, you bull. Sandy's a 7.5. She's feeling bullish. Love it. Okay. Hey, if this thing smashes like we kind of are looking forward to do in March and April, it's nice to have yourself in that situation. Okay. Okay, let's go through a couple of other things so I don't go too far over like I always do. I know. Let's look at the economic calendar real quickly for next week. Scroll back up to the top here. Monday, nothing really in new home sales. We actually had slightly better home sales recently. So the real estate market seems to be holding up and doing okay. Durable goods, nothing really there. Consumer confidence. I mean, look, it's anything above 110, the market's feeling pretty good. It's in a good spot. They're expecting it to stay there, even tick up a little bit. Home price index last time was up 5.5%. So again, the housing market seems to have stabilized. Wednesday, we have a GDP first revision expecting to come in at 3.3. We love that. We'd love to see GDP staying like low to mid threes while inflation drops below 3. That's kind of that sweet spot that we're trying to find ourselves in. Sustainable growth with contained inflation. Not much else though. And I don't think with it being a revisionary number, it's going to have a lot of impact. Thursday is when we really get a big piece of a big chunk of data. Thursday, we're going to have jobless claims, which is normal, but we pay attention to those. They're still in a great place. No concerns anywhere yet in the labor market. None. I've had a few people who say, oh, I feel like there's problems. It's anecdotal where they're like, maybe you know somebody, maybe it's a company you know. It's anecdotal. There's no aggregate level employment weakness right now. That's part of the fundamental strength that we're trading with in this current market. But we do have PCE, and PCE is one of the Fed's favorites, right? Big drop expected in consumer spending. Income expected to stay stable, spending expected to drop. That's kind of perfect though, right? Inflation cannot come down if spending continues to increase or even maintain. Inflation comes down when people stop buying shit, right? Like that's the bottom line. I mean, and so we love to see income steady and spending dropping a little because that eases that heat, that pressure on prices. Fabulous. I'm still buying. Me too. I'm still buying. Oh, goodness. All right. But the PCE is something the Fed's going to be watching. So there you go. So Wednesday, Thursday, good chunks of data. Friday, nothing really. Manufacturing, consumer sentiment. It's Thursday's the big day that we're going to be looking to see. That could be a catalyst for the market, whether it disrupts or motivates. We'll see. Here's what the Fed is thinking now. Let's just get a quick look at that. Then we're going to go through the watch list here. 96-4. I mean, it just keeps getting to the point where at this point, now and again, we're 3.5 weeks, 3 weeks from Wednesday, 3.5 weeks until the March meeting. And at this point, there's just no expectation, not even like, oh, maybe there'll be a surprise. When we look at May, this feels, I don't think it's gotten to 4-1. We're about 3-1 right now. It's gotten close to 4-1, but this is pretty close to the worst it's been. Not a lot of expectations for cuts in May. At this point, if it cut in May, it would be a surprise. And it would certainly be a surprise that the market likes, but it's less and less likely. I think Thursday will inform. Thursday's not going to impact March numbers. At this point, nobody thinks it's going to happen regardless of what Thursday brings. Unless Thursday shows like inflation at 2%, it's not going to happen. But in May, it would be a surprise. June is the first time that we have, and it's only at this point 1.5. This is this is really where we start to think, yeah, you know what, and you still have probabilities. So it looks like it's gonna be summer. And I would say the most we could expect is a 1% drop over the course of the year. Maybe we get, if we starts in June, maybe we get 4 out of 5 with a cut at 1/4 point. I don't see them at any point doing a 0.5% rate cut. Okay, let's get to the watch list. And let me get some notes. Dun, 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 dun. Okay. What do we like? What do we like? Press said, I don't see anything to give the Fed a reason to start cutting, right? At least not yet. Nothing sustainable. And they're not in a rush. They said that. That was their verbiage. We're not in a rush. We're not looking to cut, right? Which makes sense, I think. And you know, right now, anyone who has been given the Fed a hard time, which they earned, they definitely waited too long to raise rates, but since then have acted quite well. I would say most people are like, we're not going to have a soft landing. I would say that I was in the soft landing camp the whole time, because I believe we already had a recession. I don't think there was. I think we had the recession that came with the bear market. This is new. So, but I think the Fed's done well. He's no Alan Greenspan, mind you, but Jer Bear's doing a pretty decent job at this point. Now, learned from some past mistakes. Apple was like trying and then engulfed. Yeah, that just didn't work out. So I'm not going to have Apple on my list with that. It wasn't a big volume on that engulfing, but well, that's a pretty nasty failure to launch right there. AIG, anybody in? Let me know. I think we're a little late to get in. That was a big candle. Remember that the way that our alerts are going to come out, the alert, I'm looking for the alert to come out. That's going to generate the alert for the next day. And when the alert comes out the next day, there's going to be a zone. So that zone would look something like this. And that's the entry zone. If we can get it, we want to get it in there. And when we get it in that entry zone, we're looking to trigger some kind of a stop. And you know, the stop zone could be anywhere from, I would say maybe like there to there. And so you're kind of having to choose. Do I want to enter right when it enters this zone? That's up to you, Sandy. I like the idea of a preemptive trade where you're setting it up with triggers. So you're really working with your platform to say, okay, if AIG breaks above 69.20, maybe you say 69.25, I want to buy the March 70 call. And you can figure the night, you can figure out like, okay, well, what would I do with that? And so you'll have, there'll be time to be, you might have to ignore me if the alert comes out on the morning that we're meeting, but you'll have time to be working on that trade. I'm trying to get those alerts out first thing in the morning, right? Like at least 30 minutes prior to the market, that alert will come out. Right? Where would the target be? I'd probably have a primary target here where I sell something. Probably have a full target here where I'm looking for the rest. Maybe not quite that high, but I don't know. Maybe so. I think that's in the cards. So that's what information you're going to get. You can decide, do I trade the stock? Do I trade options based on the stock? Right? And I will likely throw some kind of a sample option trade, like you might look at this call, or I'm not going to go through and construct it, but just simply like, I'm thinking about the March 70 call, or I'm thinking about the March 70-72 bull call spread, blah, 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 whatever. And that'll give you a nice starting point to really build out and flesh out these trades. Anyway, that's the thought. AIG would have been viable. AMD. Yeah, there's nothing there. This is the problem we had, is we had this setup point and then we gapped. And if you missed the gap, what kind of time frame? 5 to 7 days, typically, right? 5 to 9 days, typically in that type of a range, depending. And I'll typically have a time frame associated with it too. Let's say that there was a setup here. We might say that the setup range is from here to here. What does that mean? It means this trade was never viable. It gapped right through that range. By the time it gapped, that's too much. We can't have that much risk, right? So that's what these alerts are for, is to give us the range where, as long as we can catch it in that range, we should be able to get a good reward to risk ratio. If you can't, the reward to risk is going to fall apart and it's no longer a viable trade. This is I don't want to have, like, sometimes people have alerts where like they send it out and it's like, you got to immediately get on that. I want us to be proactive as we trade and say, hey, this thing's set up. All it has to do is confirm. What are we looking for confirmation? Buyers. Great. Well, then when the buyers do something specific, like cross a certain threshold, game on, right? Does that make sense? I hope that makes sense. And I hope that, I hope that you're like, yeah, I think that would be great to have that starting point for a trade. I hope. Let me know. I mean, I'm open to possibilities. So a lot of things did that gap. We don't want to chase those things, really. Amazon did it. AXP, however, I like. No gap, strong stock, strong sector. What can we look for here? Bam. Heikin Ashi. Now, this looks viable. I feel like you could take a trade like this. I typically want to be on the first or second of these candles, but they haven't moved that far. So I would actually still say, if I can catch this under 215, I think it's a viable trade. I'd start with my stop loss. Probably, if I get in, I'd probably have this stop for the next day. So stop loss would be around 212.25. I think I could work with this. I'm looking at this on Monday. Boeing, there's nothing there for us in Boeing. I'm not trying to trade Boeing. Looks terrible. BLDR, they reported. It looks good. I would put BLDR on my list. Industrials, it's pulling back. I think there could be a trade coming there. Sure. I'm open to that. BX, nope, nothing there yet. City, what did I do? I sold some. It was Friday, it was at resistance. I sold a little bit. Is anyone still in City with me? Why am I still in City, even though it seems to be dipping a little underneath my line here? Guess what it did the last 2 times? Right here. It went up, and then it dipped a little bit, and then bammo. And over here, it went up and dipped a little bit, and then bammo. I don't want to miss this bammo. I'm a little bit nervous that I'm going to miss that, so I held on to some. So I held. What else? Nope, not a line chart. Nope, not a candle trend. Let's go Heikin Ashi. The Heikin Ashi look good. They look good. The Heikin Ashi would have kept you in to catch those blamos at the end. I want it. I need it. Let's see what happens. Certainly not a setup, though, right? Certainly not a setup. Caterpillar. I'd put Caterpillar on the list. And I wonder if that is giving the first Heikin Ashi on Friday. Second. Okay, so we would have preferred to have caught him a little earlier. Cat already in Cat Bob said that makes sense. I would say Capital One is viable. Where are these trades so far? They're in financials and they're in industrials, exactly where we'd expect them to be. ConocoPhillips sideways. Costco still in. We've got a signal back here coming out. Just kind of, it almost faltered, but went. CrowdStrike, I'm waiting. I don't love what happened to CrowdStrike. It got correlated down with somebody else, but if it makes a higher low from here, then I would look to trade it. Oh, look at CSX. CSX gave a signal back here. I don't know what happened. Oh, that's false. That didn't happen. I'm like, I don't remember that happening. It didn't. This is just nice and strong. Um, this is what it should look like. I don't know. I don't know why they have these bad feeds. I'm going to show you what it should look like. This didn't happen. Ooh, that's what it should look like. And you're like, Scott, you're magic. How did you make that disappear? Yeah, I'm magic. That's what it should look like. It looks great. Anyone end up taking this trade coming out of this? It was a great signal on what day was that? Wednesday. Great signal on Wednesday. But a little too late now. Okay. I'm gonna clear my magic treat. Sold too early. Ah, okay. All right. Good recognition. Let me. I gotta speed up here. Delta. Still can't toggle. Delta's a no for me. No. Dow looks pretty strong. Ford, put it on the list, right? Ford looks great. I like how Ford looks. Fastenal, like um, CSX Industrials. Some of them already moved. Some of them are pulling back still. That one already moved. GBTC, put it on the list. If you've had any interest in speculating in some love it, Sandy, in Fastenal. Ah, love it. Good one, still moving. GBTC is consolidating. May give us a trade soon. GE, look at that monster. You just don't describe GE as a monster very often as a stock, right? But look at it. Sure is. Gold, no. Google. Google, we looked at it and said if you like holding and it held, but I don't know. I couldn't do it. Home Depot, strong, continues to outperform my expectations. I never seem to give it its credit. IBM, nothing for me yet. Intel, nothing for me yet. IWM, maybe. Small caps trying to make a bounce possibly here. Yeah. JP Morgan, very strong, but overextended now. Nothing for us. Meta, I'd be thinking about it. Microsoft, a little too far. Didn't really give that signal. Netflix, I'd say Netflix is still viable. Possibility there. NVIDIA, got to just wait for that. Picard, got to wait for that. But we're still seeing the strength in all the right places. Ross Stores, that was one that we had looked at that was new, gave a nice little signal right there. It's moving, it's pulling back. I don't know. I did not take that one. I thought about it. I wished I would have now. SMCI still all over the place. SPY looking fine. Still in it, Michael? I asked about this one the other day. You weren't on. I was like, I'm hoping he will. I'm hoping he is. Those are hard. Those are the hardest. It is hard to stay with moves like that, right? Because it's just, I get it. I hope you squoze a good chunk out of it, my friend. UNP, CSX was mine, but UNP also looked pretty good. A little too late now. There's the VIX coming on down. I don't know why this always thinks I want to trade this. Waste Management to extended waiting. Walmart, it's about to split. Okay, XBI still looks strong. Basic Materials, God, they just keep looking stronger and stronger, don't they? Communication Services still looks good. Energy, Financial still looks good. Industrials looks good. Technology had a little bit of iffiness, but back on track. Staples looks stable. Utilities doesn't look anything. Healthcare looks strong. Staples looks strong. Are the strike prices for Ford odd? Let me go take a look. That's a great question. Let me see. Let me pull this over. Yes. Yes, they are odd. There must have been some kind of an adjustment due to, so the Marches are, the Aprils are, you might find weeklies that are not because they get issued more frequently. But it looks like all of them. Okay, see, the April 5s are not. The April 5s are not. You could certainly go there to trade if you prefer. Are there any others? Yeah, so basically that's the first set of options that have been released since whatever happened. But yeah, Nick, they're definitely odd prices. I mean, it's not that big of a deal. You can still just come in and do your analysis, and it's just a funky strike price. Nice. Good recognition. Okay. Yeah, okay. We have, a decent list of things setting up. Let's real quickly look. Where are we starting here? We are starting over with section 1, personal info. Hopefully, now that you've looked at like some of the mechanisms we use for setting goals, we set goals around weaknesses. So it's important for this. This is part of it, is just sitting down and really truly reflecting and finding those strengths and finding those weaknesses. Don't go with like, oh, I'm impatient. Really find something meaningful that you can work on. Build that commitment statement and help find that discipline. Write your mission statement to make this feel like a business and flesh out that vision of what does trading look like when it's successful. Make it colorful, make it motivational. That's its point. Spend some time. Likes money is a weakness and a strength. I love it. I used to have a video of that old Wall Street movie, right? Remember that with Michael Douglas, Gordon Gekko? Greed, for lack of a better word, is good. The whole speech. Okay. So give me my hour. If you didn't last time, commit to that hour, 1 hour. 3 ways to do it. 20 minutes a day, 3 days a week. 30 minutes a day, 2 days a week. 1 hour once a week. That is dedicated specifically to your trading plan. Nothing but your trading plan. And this week we're working on section 1. Look what you could do in an hour with just this, right? And spend some time, think about it, work on it, write it down, type it out. Watch this trading plan turn into the beautiful, beautiful guiding document that it should. All right. I'm already 5 over. I feel like the watch list is good, but I do want to spend some more time. I just have to speed myself up. Maybe we'll squeeze in a search tomorrow. If you feel like, if you look through and you feel like we have a sector that we could definitely have better candidates on, I want you to flag it for me tomorrow, and we'll see what you guys come up with. I will see you guys tomorrow morning. I'm going to reach out to find out if the alerts are in place, or excuse me, the SMS, if the SMS is in place. I think it will be, but I will look to see. But I will also send the alert out for anyone who needs it for Discord to get in there, participate. It's a great community. We really have some great discussions going on in there. A lot of great support and resources available. Thanks, everybody. Enjoy the rest of your Sunday. I'll see you tomorrow morning. And as always, happy trading.